What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Today we're going to talk about preparing for the bounce. Yeah, we're heading into a new week, going into the 6th trading day, and this is where typically from a seasonality perspective, that's what we're looking at here. I know there's a lot of lines. The dashed lines are pre-election years, and it's for the month of September. And this is typically where you start to see a bounce. So we're going to talk about preparing for a little bit of a bounce. So I'm going to start building out the case for that. But we're also going to be focused on risk because there are still many risks out there in the marketplace. We're going to start off looking at the Bullish percent index chart. Michael, what the hell's that? This right here is known as the Bullish percent index. It's the percent of stocks listed right here on buy signals based off of the point and figure charts. They look like tic-tac-toe boards. So when it says 52.40, it means 52% of the stocks in the S&P 500 are on buy signals based off of those point and figure charts. Now, what I like to do is I like to apply a relative strength index at the bottom down here. And when I do that, you can see that you typically get oscillating from overbought conditions to oversold conditions to overbought to oversold, oversold to overbought, and so forth, and it goes back and forth. I like to look for divergences. I also like to look for when it gets overbought and oversold because it gives me a heads up. It gets me kind of ahead of, the next potential move to come. And as you can see, we went from overbought, which we talked about it when it was there, way up here. We said when it starts coming down and crossing down through 70, we can see weakness, which we have in the past. That's just kind of a pattern that's been noticed by many technicians, and the market started to sell off. Well, now I want to call out that, hey, we just got a downtick in the Bullish percent index chart to 52.40. The RSI is back into oversold territory, but you'll notice here is that low is actually lower than that low, which is what's known as a divergence. It's diverging from the RSI. So what you'll see here is you have a low and a higher low showing us that the internal is potentially strengthening as this is heading down. And we've seen these from a negative perspective. We've seen them from a positive perspective. You can see it match the August high right here. And then same over here going into around 2023 where we started getting that pullback right over here. Okay, so now what I want to call out that yes, the RSI is in the oversold condition. I'd like to see it start to turn back up, okay? But you never know. It could still do something like this where it can build out a multi, kind of a pivot point divergence right here where you get like multiple dips into oversold. Very similar to how we saw, there was a high, a lower high, and this thing kind of kept on squirreling up before it sold off. So I wanted to call out that, yes, it is potentially setting up here for a bounce in the overall markets. But it's not just the Bullish percent index for the S&P 500. It's also the Bullish percent index for the NYSE, which is a much broader index. So you'll see here we're below the 50 marker. We're at 49.12. Remember, if you just look back to the left of the chart, there's been times where we've gotten a lot lower. So even if this were to come down, that still would be actually a positive divergence forming. The RSI, if it starts breaking down, lower than this, then that would be obviously no longer a divergence, right? This can head lower, right? But if this starts going down to this low, then that wouldn't be a divergence right there. You'd want it to be above this. So sloping like so. Tells us that the internals are strengthening as this is going down. Gives us a positive reading where we can potentially go into the various candlestick charts from an absolute perspective and start to look for a potential bounce in something like the IWM. Okay, so we have a Bullish percent index for the NYSE and the SPX, both positive, so that's a positive sign, and we're heading into a period of seasonality where, yeah, a lot of bad things happen in September, so we got to be cautious, but we're moving into the period where you kind of get this little bit of a ramp up. Okay, and I'll show you something else that's very cool here in a moment. Now, if I take a look at the market view of how we did for the week, what you'll notice is, once again, we had a lot of red. This is week to date over here. We got month to date to the right of it, and then year to date. We're going to focus on the week to date, and what you'll see here is we had energy. Energy was up in the green. No surprise there when you start to see, for example, crude oil, right? That was up too as well. We had Bitcoin that was up slightly, but then a couple of other ones to point out is obviously the 10-year yield and the dollar. These are two very important intermarket assets to continue to watch because when you get the dollar up and when you get the 10-year up, what we've been noticing, right, when they move up together, what you'll notice is the markets, we get a lot of red on our screen for the week and also month-to-date perspective there too as well. As far as other assets that were in the green, we also had utilities, so more of a risk-off type week overall. And if we take a look at the expected moves for last week, so this is something that I share with my Patreon group. Okay, if you don't know about my Patreon group, it's actually it's a Patreon. You sign up through Patreon. It's $9 a month, or you can sign up for a year. It's $90. It ends up being $7 a month or something like that. But you can just pay it all up if you don't like the monthly fees. But I give a lot of different things like the weekly expected moves in there. I give daily expected moves on the assets that have that. And just various other things. We just recently included, I'll actually show you, we recently included Tradie Ticks, all their bots that they have. So like, if, for example, like Scout bots, it gives us stuff based off of the strat where it gives you entries, exits, and stuff like that. It's quicker. If you like options flow, it gives you, large sweeps, golden sweeps, and stuff like that automatically. You can also go into the query section. You can type in various queries. So there's a bunch of different ones that you can type in. And, for example, like 0-day gamma exposure levels, you can get that intraday. You can get just all kinds of stuff in there. I'm not going to talk too much more about that, but if you want to check it out, it's $9 a month. So back to the weekly expected moves. Something to notice here is I added this column over here called outside, and this just tells me really quickly at a good glance, hey, what assets finish outside of what the options market priced in as far as risk goes, and what finish with inside. So when the box is yellow, you can see the yellow boxes over here. That means that the asset over here finished within what the options market priced in ahead of time. All right, and these change, obviously, every week I update these. But what you'll notice here is we have like XLY, right, consumer discretionary. It's yellow, right? That means it finished within what the options market priced in. And if you're looking at this in terms of probabilities, 68% of the time it finishes within these weeks. Now, what you'll notice here is the only green one on the board was UUP. So green means that it finished above the outside of its risk kind of range that the options market priced in. So the asset finished here, right? And then it said that it finished within this kind of range here. Now, when it's red, it means that the asset closed outside of that expected move, or what the options market was pricing in as forward-looking risk. So what you'll notice here is really what moved the market. You'll see two pretty big assets, right? The Apple and then NVIDIA, they both finished outside the lower weekly expected moves. All the other big market caps like Microsoft, Google, Amazon, Tesla did not. Netflix, Meta, and AMD also some big names there. So we had just some massive volatility within Apple and NVIDIA, which really added to a lot of volatility in the overall market index products, such as the SPY, right? The SPY finished outside of its expected move, not by much though, 445.52. Right? And the weekly lower expected move was 446.31. So it was slightly under there, but it was still nonetheless outside, which means that the options market got it wrong, right? It's actually been getting outside of it a few times now and closing outside of it. So there's a lot of volatility in markets. You got to be aware of that. If we take a look at some of the intermarket assets that I like to keep an eye on, like the dollar. The dollar has been on a monster run up. We're starting to see it back off slightly right over here, so we'll see how it plays out tomorrow. Now remember, if this goes up, we've been seeing the S&P 500 go down. Very similar to how we found the October low in the S&P 500. Market went up. What did the dollar do? It went down. Well, now we're starting to get a pretty large move. Now I want to point out September seasonality for the dollar, it's typically bullish. However, in the middle, right, like middle to the, early stages, I guess, of September, which we're on the 10th, so we're right around there, you actually see a drop in the dollar before a big run up. Okay, so this is the month of September right here. And if you notice, right, if I'm pointing an arrow at it, you see a move higher, then a move lower, then a move higher. Okay, well, what's interesting here is what do you see in September here? This month, this is all the month of September. You'll see the market move up, right? And then it moves down, okay? And this move down really aligns with that big spike up here in the dollar. So if seasonality holds true, that means what we might see is the dollar take a little bit of a back seat, but you may see it run back up, something like this, where the month of September, which is right here, right? This is area right from here to here is in September, where you might see a dip and then pull back up to go higher, which would make sense because you would just be putting in a higher low, and the trend would be putting in a higher high at that point, and that would be potentially bad for the markets. If you look at The TNX, the 10-year yield, is still butting its head up higher. This is making, this is probably worrying markets, I would imagine, to an extent here. When rates go higher, right, you're noticing like oil's moving higher, energy names are moving higher, and if you go back to the start of the year, they're moving hand in hand. And if you really look into intermarket stuff, which I don't have the chart right now, but rising costs of oil, they have not been good for stocks. So be aware, if we get energy to continue to run up and it doesn't take a back seat, that could spell bad news for the stock market. I'll have to share a chart like that here in the next couple of videos. Which, by the way, if you haven't subscribed, make sure you just subscribe to the channel and like the video if you like this type of content. Here's the SPX. What did we notice today this week? We had an inside trading week. So what does that mean? We're just consolidating as it stands right now. We close right around that flat weekly 5 EMA. We have 45.27. S&P 500 is holding that level as resistance. Multiple times you can see we had resistance, support, resistance. Once we broke it, became resistance, right? Still resistance. So if we start getting back above that, that opens the door to that 4,600 and striking the prior 2023 high, if we can get up into that range. Now, this is where it gets a little interesting. I'm applying a 5, 10, 20 EMA. Okay, this is known as the 5, 10, 20 timer. Just, it's backwards data, it's lagging, but it gives us ideas of potential changes in trend, where you'll see that the 5 is above the 10, which is above the 20, the trend is up. However, if the 5 is below the 10 and below the 20, the trend is down. And as it stands right now, the 5 is above the 10, is above the 20, but it's starting to coil up. And this right here means that we potentially might see a stronger move in the very near future. Now, if I look at this, there's a couple ways I can look at it. I can look at this as a potential bear flag, okay? Boom, and we saw this kind of candle right over here. It's not a great looking candle. I'll draw it out for you. It has a body like this, and then it has a tail like so that's, twice as big as the body. This is known as a shooting star candle. And what these mean are potential changes in trend, or they can lead to a potential change in trend or marker reversal. Now, I like to see them from a period of of the price moving up and being at the top. This really is more, if I look at this chart, it's more right here towards the bottom, but you did see a little bit of a bounce. It's getting a little bit of rejection. So the way that I read into this is you want to crack above this high to invalidate this shooting star type candle. So 44.73. If we start getting back above that, that means we're back above the 5, 10, 20, and we could go shoot back up to around that 45.25 level is what I'd be looking at. Now, if I look at the Qs, also very similar. You have an indecision type candle as far as the body goes, but then you have a long, upper tail like so. You can see it's kind of getting congested between the 5, 10, 20. So if it starts cracking down below the low, which you'll notice here, it does also look like a bear flag. But if we start getting above that 375, at least that opens the door to come to around that 380 marker and potentially go try to test this prior area of resistance right there. Say with the COMPQ, you can see this is a broad market, but you also have a reversal type candle. And you have the 5, 10, 20 right there starting to really get close to each other. And when they start to coil up like that, it can present itself as a big move. Very similar to right here. They started coiling up, price action coiled, and boom, we exploded to the upside. So yes, this could very well be a bear flag, but if we start getting above the high and these start to, resync themselves like so and start to move back up, that could be a potential good thing for the overall markets. Now, one of the things that I wanted to point out was here on the SQQQ. Now, for those that don't know what this is a more of a shorter term trading tool, I guess you can use, right? Now, for those that don't know what the SQQQ is, this is ultra short the Qs. So it's basically inverse Qs, but it's also using leverage. So it's a tool that can be used for trading or shorter term swing trades. I wouldn't recommend holding for, extended periods of time. However, what I want to call out here is really something very simple. What you'll see here is, as I've been pointing out bear flags, you can see that there's somewhat of a bull flag or a consolidation here taking place here. So if this starts getting back above the 20 period EMA, and you can see that little hammer candle, right, that would be probably pretty obviously bearish for the Qs, but it opens the door to potentially get some long exposure on inverse ETF to potentially play up to around 21. Okay, so that's something, a little tight consolidation I'd be watching for right here. If you're looking for a bounce, obviously in the markets, you'd want this to start coming right back down, obviously. Now, going into tomorrow's trading session, you'll notice here, or today's trading session, whenever you're watching this video, a market DEX is negative. So there's a little bit more of a bullish tint going into tomorrow's trading session. If I'm taking a look at gamma exposure levels on the SPY, what you'll notice here is we have a month-to-day anchored VWAP, and that's holding as resistance. So basically, it's telling me that the average buyer price based off of time and volume is underwater. They're below that month-to-day anchor VWAP. However, from this big pullback over here, this swing low, they're above it as it stands, and it's holding as a level of support. So as far as downside goes this week, I'd be paying attention to around 442, 443 in the SPY. Those are positive right here, so these can potentially act as levels of support. But if we start getting under 440, that could be where something very dangerous happens, where we can see a very strong move. So be very aware of that 440 level going into, obviously, this next trading week. If I pull up the SPY, I'm going to update you with the weekly expected moves. That's 451.79, 439.25. So that right there is what the options market is saying. Hey, when you're going into next week, this is what we expect as far as a range of risk goes. Now I'm looking at the 15-minute time frame. I want to call out we're below the 5-day moving average. We're below the month-to-day anchor VWAP, which we already discussed. So if we get a bounce up here to around 447, I'm just going to call it 448. It's 447.98. That's the upper daily expected move. Okay, so we go up there, it could be acting as a level of potential resistance. If we start breaking down, what do you notice? That 443, that 440, right, and that 439.25, which kind of lines up. You can see 440 there, that GEX level, and you have that 440.60, 439.25. So if we start getting below these levels and we start seeing explosive amounts of volume, be very cautious. Understand that from the shorter term direction, right, the 5-day moving average, as it's pointing down, it is still, the bears are in control. That doesn't mean that we can't see a bounce, but just be aware that you want to see, if you want to be more bullish and you want to actually have more exposure, it's nicer to see it above this in trending upwards, okay? We do have a lot of data coming out this next week on Wednesday. I'll start on the 12th. On Tuesday, we do have an Apple event that's not listed here. I believe that's the 12th. So be aware, Apple events could obviously bring market volatility, as Apple is the largest market cap name in the S&P 500. You have September 13th, we have inflation data. We have retail sales and PPI on the Thursday. And then Friday, we have some other interesting data points, including Michigan consumer sentiment. So it's going to be another week of volatility type events that can bring volatility into the markets. So as usual, we got to be careful. We got to be safe. We got to manage risk and pay attention to trends. That's all I got for you on today's video, everybody. See you later.